Hello students, today we are again talking about retirement of a partner. This is the second session of retirement of a partner. As per the checklist given, we have already covered the first three topics and they were calculation of new profit and loss ratio and gaining ratio, treatment of valued and appeared goodwill, treatment of accumulated profits reserves and losses. Today, I am going to talk about a very important topic, that is partners capital account and partners capital account adjustment. This is a very important topic we have for retirement of a partner. So let's begin with this. So first of all, what is the amount to be credited in partners capital account? So first of all, whenever we start with the credit balance of partners capital account, and this need to be posted into the credit side of partners capital account. If we are having the credit balance of current account or the balance of current account which is stated in the liability side of balance sheet, so that can also be transferred to this side, or else you can prepare separately. Share in accumulated profits and reserves, whatever accumulated profits and reserves we have, that need to be distributed in the partners on the credit side in their old profit and loss sharing ratio. Revaluation profit again has to be distributed to the partners on their credit side in their old profit and loss sharing ratio. Adjustment of valued goodwill, because when we are talking about the retirement of a partner, so one of the partner is exiting from the firm. So definitely his capital contribution was being adjusted between the existing or the continuing partner. So adjustment of valued goodwill has to be made. Next one is interest on loan to the firm. Interest on capital up to the date of retirement, if allowed by the partnership deed, that has to be done. Now the second part is what are the items. Here I have written decreased and there I have written increase. So increase means when your partner's capital account is being increased, so it's supposed to be posted into their credit side. And whenever we are talking about decrease, it's need to be taken into the debit side of your partner's capital account. So what are the items posted into the debit side of partner's capital account? So first of all, we need to post the drawings of the partner. If interest on drawings is also mentioned, so we need to calculate, or if given, so we can write the interest on drawings also in the debit side of partners capital account. Share of accumulated losses like defer revenue expenditure, advertisement suspense account, P&L account debit balance, if it is given in the asset side of your balance sheet, that has to be distributed between or amongst all the partners including the retiring partner in their old profit and loss sharing ratio on their debit side. Revaluation loss again should be distributed between the partners in their old profit and loss sharing ratio. Suppose if loan is advanced by the firm to the retiring partner, that has also be considered in the debit side of partners capital account. Again, interest on loan by the firm if given, so that's also need to be placed into the debit side of your partners capital account. So in first and second step, I have told you how to prepare the partners capital account and how to post in the credit side and the debit side of your partners capital account. Now we are going to experience how to prepare the partners capital account. So this is your partners capital account. Here you can visualize this is the partners capital account, and increasing side is the credit side and decreasing side is the debit side. So first of all, we have written the opening balance of capital, which is stated in your liability side. Accumulated profits and reserves we have posted, and revaluation profit we have given, and whatever adjustment of goodwill is there, so that adjustment has to be made, and these all things has to be posted into the credit side. As far as the reserves and profit and loss and revaluation profit are concerned, this need to be distributed in the old profit and loss sharing ratio. This need to be distributed in the old profit and loss sharing ratio. Everything is being distributed between the partners in their old profit and loss sharing ratio except this valued goodwill, because this need to be distributed or adjusted, you can say, in the gaining ratio. Now on the debit side, because this side declines the partner's capital account, so drawings has to be posted, interest on drawings if given, as I discussed earlier, to profit and loss account, and whatever accumulated losses we have, that is again distributed between the partners. Revaluation loss again distributed between the partners. Loan, whatever loan taken and interest on loan imposed on that has to be considered into the debit side of your partner's capital account. Now, if the credit side is exceeding debit side, just let's take an example that credit side total is 1 lakh and debit side total is say 80,000. So it means there was an availability of retiring partners capital account was 1 lakh and there is a requirement and we can say it is being declined by 80,000. So the difference of 20,000 has to be paid by the partner, paid by the firm actually to the retiring partner, maybe immediately or maybe after some time. If it is paid immediately, so the entry should be retiring partners capital account debit to bank account. So I have written here to bank account for the same. Suppose if it is not paid immediately, if it is paid in the future, so that is being transferred to his loan account. So for that, it should be to retiring partners loan account. Okay, so now let's move on to this condition. Suppose amount due to the retiring partner, if retiring partner's capital account is paid immediately, as I mentioned in the ledger account, so the journal entry should be retiring partner's capital account debit to cash / bank account. If it is paid in installment, the due amount is transferred to his or her loan account by amount as is agreed on due date. Loan amount to carry interest at the rate of 6% if nothing is given. Suppose if different interest rate is given as per the partnership deed, so we can consider, we can calculate on that interest. But suppose if nothing is given, so we need to consider at the rate of 6% per annum. Now the journal entry is retiring partners capital account debit to retiring partners loan account. Now we are talking about the adjustment of partners capital account. So there are three types of adjustment. First adjustment is when the capital of the new firm is given. Second adjustment is when the capital of the new firm is not given. So we need to calculate that. Third condition is when the outgoing partner is to be paid through cash brought by the continuing partner in such a way as to make their capital proportionate to their new profit sharing ratio. Here I have used a term outgoing partner. So this outgoing partner means the retiring partner. Alright, so these are the three conditions which I am going to discuss with you. So this is the case 1 when the capital of the new firm is given. So when the capital of the new firm is given, so how can you deal with this? It's really simple to understand because after the retirement of the partner, how the existing or continuing partner or you can say the remaining partner will continue in the future. So as far as the capitals are concerned, if the capital is given in the question, then how can you deal that? So I have given you certain steps which you need to take into consideration. So first is calculate the adjusted old capital of continuing partners. You have already calculated the adjusted partners capital, I mean old partners capital. So when I am saying the adjusted capital, what does it mean? It means the capital along with all the information like accumulated profits and reserves, like revaluation profit, like adjustment of goodwill in the credit side. In the debit side, drawings is there, interest on drawings is there, accumulated losses are there, revaluation loss is there. So after doing all the adjustment, that is called adjusted capital. So adjusted capital of the old partner. Calculate the new capital of the continuing partner. So whatever the capital of the continuing partner is given, I mean firm is given, that's need to be distributed between the continuing partner in their new profit and loss sharing ratio, right? So new partners capital and the old partners or adjusted capital is given with you. So if the new partners capital account is more than available, so what we can do, and if the reverse situation happen, then what we can do. So if the adjusted capital is more than the required capital. When I say adjusted capital, when I say available capital, it means the credit side of your partner's capital account. If the sum total of credit side of partner's capital account is more than the sum total of debit side, credit side is again represented by available capital for your reference and debit side is represented by your required capital. So if the available capital is more than the required capital, it means the surplus amount has to be withdrawn by the partners. That surplus amount has to be paid by the firm to that concerned partner. For this, the journal entry should be concerned partner's capital account debit to cash / bank account if it is paid immediately. But if it is not paid immediately and in question if it is given that the payment is not yet made immediately and the adjustment has to be made through the opening a current account. So instead writing to cash oblique bank, you have to write to concerned partner's current account. Now the second condition, if the debit side is more than the credit side, then that partner is having a deficiency of the fund and that deficiency has to be borne by him. I mean, whenever there is a deficiency, so the additional amount of capital has to be introduced by that partner. For this, cash oblique bank oblique partner's current account. Now cash oblique bank we can use when if nothing is mentioned or if the adjustment is done immediately. But suppose if it is mentioned that the adjustment is not made immediately and we can make it later on also through opening a current account. So instead of writing cash oblique bank account, partner's current account. But as far as the opening the partner's current account, it must be given in your question. So cash oblique bank oblique partner's current account debit to concerned partner's capital account. This is the combined entry. Alright. So now let's take a question. Example, X, Y and Z are partners in a firm sharing profit in the ratio of 3:2:1. On 1st April 2021, X retires from the firm. Okay. So this gentleman X is retiring from the firm. Y and Z agree that the capital of the new firm shall be fixed in the as rupees 2,10,000 and it's need to be distributed in their profit sharing ratio. Their adjusted capital were for Y it was 145 and for Z it was 63,000. Now it's really simple to understand. This was the availability of capital for Y and Z. And this is the required capital of the firm which need to be distributed between Y and Z in their new profit and loss sharing ratio. So since X is no more in the partnership, he is retiring. So the new profit and loss sharing ratio of Y and Z would be how much? It should be 2:1. So we have calculated the new PSR and now the second step would be distribute the total capital that is 2,10,000 between Y and Z in the ratio of this. So it means Y's new capital is 2/3 of 2,10,000. So that should be 1,40,000. And Z's new capital equals to 1/3 of 2,10,000. That should be how much? 70,000. So this is the available capital of Y and Z. And there was a required amount of, this is the required amount and there was an available amount of 1,45,000 for Y and 63,000 for Z. So now we need to make some adjustment. So basically as far as the Y is concerned, he's supposed to manage, he's supposed to have 1,40,000 as a capital, but he already had 1,45,000. So here you find that the availability of capital of Y is more than the required capital. Am I correct? So here the available capital is for Y is 1,45,000 and the requirement is of 1,40,000. So it means this is the amount which is being withdrawn by Y. And for this we need to pass the journal entries Y's capital account debit, Y's capital account debit and the value is 5,000 to cash oblique bank account. The same thing has to be done for Z also. So here Z says, you find the required capital is 70,000 but there is an availability of 63,000 only. So here you find that required capital is more than, required capital is greater than the available capital. So basically there is a condition of deficiency, and this deficiency has to be brought in by Z as an additional capital. So here the required capital is of 70,000 as we have calculated, and the available capital for Z was 63,000. So basically there is a difference of 7,000, and this amount has to be brought in by Z. So here you can pass cash oblique bank account debit for by 7,000 to Z's capital account. In case of current account, I have already told you that cash oblique bank account is being replaced by the current account. So this is the journal entry for Y, and this is the journal entry for Z. I hope you understand this. So let's move on to the second topic. Now, when the total capital of the new firm is not given. So whenever the total capital of the new firm is not given, so first of all, we have to, take out the closing old capital of all the partners. I mean, when I say all the partners, so there are two conditions. In the first condition, case 2, we can consider only the continuing or existing partner. So first of all, we have to adjusted old capital of continuing partners. And the second condition, that is the case 3, I am taking all the partners also. So calculate the adjusted old capital of continuing partner after all other adjustment. Calculate the total capital of the firm, calculate the new capital of the continuing partners, calculate the surplus or deficit of comparing step 2 and step 3. And whenever I say the comparison, so again the credit side is being compared with the debit side. I mean, credit side of partners capital account is being compared with the debit side. So if the availability is greater than the requirement, the same entry has to be passed. That is, that concerned partners capital account debit to cash oblique bank, and if it is paid through the current account, not paid initially, so to partners current account. In the reverse situation, when the debit side total, I mean the required capital is more than the available capital, so the entry should be reversed. It should be cash oblique bank oblique that partners current account debit to partners capital account. So I'll just take one question to make you more understand with the concept, more acquainted with the concept. So basically, I have taken example number 2. A, B, C are partners sharing profit and losses in the ratio of 4:3:2. On 1st April 2021, B gave a notice to retire from the firm. A and C decided to share future profit in the ratio of 1:1. So this is the new profit and loss sharing ratio. The capital account of A and C after all adjustments showed a balance of 73,000 and 47,000 respectively. The total amount to be paid to B was 65,500. So B is a retiring partner and we are making the payment to B. A and C would like to adjust their capital in their new profit sharing ratio for the new firm. So first of all, we can consider the capital adjustment of the existing partner. So their old capital, I mean, I'll just take this. Their old combined capital, old combined, you can also call it old combined adjusted capital. What do you call it? Old combined adjusted capital was 73,000 and 47,000 respectively. So now if you could make the total of this, so this should be 1,20,000. And what is the new PSR of A and C? So now B is no more in the partnership. So A and C is having the ratio of 4:2. If you could simplify this, so that it should be 2:1. So now this total capital of the new firm should be given in favor of A and C in the ratio of 2:1. So I can call it A's new capital. That is 2/3 of 1,20,000. So it should be 80,000 for A, and for C it should be 1/3 of 120. So that should be how much? 40,000. Okay. So this is the new capital of A and C. So here A's new capital is 80,000 and C's new capital we have already calculated, that is 40,000. So now we'll do some adjustment for A. So A's capital adjustment. So it's really simple to understand that A is already having an availability of 73,000, but there is a requirement of 80,000 after the capital changes. So 80,000 is the required amount and 73,000 is the available amount. It means there is a deficiency of 7,000 and this deficiency has to be borne by A. इसके लिए हम एंट्री क्या पास कर सकते हैं? इसके लिए एंट्री हम पास कर सकते हैं कैश ऑब्लिक बैंक अकाउंट डेबिट वैल्यू 7,000 टू A's कैपिटल अकाउंट. और स्पेशल कंडीशन में सपोज करंट अकाउंट के बेसिस पे उन्होंने बोला है तो कैश ऑब्लिक बैंक अकाउंट को आप A's करंट अकाउंट से रिप्लेस कर सकते हैं. इसी तरह मैं सी का भी कर लेता हूं. तो सीज का कैपिटल एडजस्टमेंट. C already having a capital of 47,000 but there is a requirement of 40,000. So here we can easily notice that the availability is more than the requirement. Then the difference is a surplus amount and has to be withdrawn by that partner. So here we find there is a surplus of 7,000 which has to be paid to C. So for the journal entry for this is C's capital account debit by 7,000 to cash oblique bank account and this is also 7,000. Alright, so ये adjustment हमने capital के कर लिए. Now the next part is the total amount to be paid to B was 65,500. So B is the retiring partner and whenever you are making the payment to B, so इसके लिए journal entries आप क्या करने वाले हैं? Simple, B's capital account debit to cash oblique bank account and the amount here is 65,500. I hope you understand this. Now moving to the last concept. So this is the third concept. When the outgoing partner is to be paid through cash brought in the continuing partners in such a way as to make their capital proportionate to their new profit sharing ratio. Now what does it mean? It simply means in the previous part I have just combined the old partners capital account, and when I say old partners capital account, so I have combined only the old continuing partners. So in the previous question A and C was the old continuing partners, so I have just adjusted the capital of A and C. But in this case 3 we have to adjust all three partners. Let's have an example. A, B, C तीन partners हैं and say B is a retiring partner. So you have to combine all the partners capital account together. When I say all the partners, it means including the retiring partner, and that including the retiring partner's capital becomes the total capital of the firm. And that total capital of the new firm is being distributed between the continuing partner in their new profit and loss sharing ratio. And the difference part is same. If the credit side is greater than debit side, then same entry has to be passed, partners capital account debit to cash oblique bank oblique partners current account. And if the debit side is greater than credit side, then again the same thing, cash oblique bank oblique partners current account debit to concerned partners capital account. So these are the broadly conditions, these are the probably steps. I have given certain extra steps, you have to follow this, you will not make any kind of mistake in that. But the main concern is you have to combine all the capital account including retiring partner. This will be the first step. Second step, you can say find the new profit and loss sharing ratio. Third step, distribute the total capital between all the partners. Between all the partners means all the continuing partner in their new profit and loss sharing ratio. And fourth step is again take the difference. But in order to understand you better, I have given you 5 steps to go slowly with the concept. Okay. So let's try one question on this. Now I have taken an example. X, Y and Z are partners sharing profit and losses in the ratio of 3:2:1. On 1st April 2021, X retires from the firm. Y and Z agrees that the capital of the new firm shall be same as the total capital of the total closing capital of X, Y, Z. So this is the new concept, right? The total capital of X, Y, Z after all adjustment on the date of retirement showed a balance of 145, 55 and 1 lakh respectively. So as per the steps, we have to find the closing combined adjusted capital of the all the partners. Adjusted capital of all the partners. So when I say all the partners, it means including the retiring partners capital. So I have just make the sum up of the value of X's, Y and Z's capital. So here I can combine all the combined adjusted capital of X, Y, Z. So 145 plus 55,000 plus 1 lakh. So these are the capital of X, Y and Z respectively. If you could just make the total of this, so 145 plus 55 will give you 2 lakh plus 1 lakh. So the total capital should be 3 lakh. Now, this is the closing combined capital of all the partner including the retiring partner. Now we have to calculate the new profit and loss sharing ratio. So here I have considered that X is the retiring partner. X is the retiring partner. So between Y and Z, the new ratio is 2:1. And the total capital of the firm is now being distributed between Y and Z in their new profit and loss sharing ratio. So here I can just find the Y's new capital. So Y's new capital is 2/3 of 3 lakh. So that should be how much? 2 lakh. And Z's new capital is 1/3 of 3 lakh. So that should be how much? 1 lakh. Okay. So first of all, we need to adjust the existing continuing partner. So if you could make the adjustment for Y, it should be, I'm just talking about the capital adjustment and then I'll adjust Y's capital first. So basically Y is having a requirement of say 2 lakh as per the new capital changes, but he has only 55,000 in hand. So it means here you can easily notice that the required capital of 2 lakh is exceeding the available capital of 55,000, and there is a difference of 1,45,000. Now if you could see the changes in Z's capital account. So Z is having no changes in their capital account. Why? Because the requirement is of 1 lakh and earlier also he used to have 1 lakh only. So the required capital of 1 lakh is similar to the available capital of 1 lakh and there is a no changes of. So it is clearly stated that Y has to bring 1,45,000 additionally in order to adjust his capital. So for this you just have to write, I'll just write the journal entries over here. So the journal entry for Y is cash oblique bank account debit by 1,45,000 to Y's capital account. Okay. Now, as far as the retiring partner is concerned, so here the retiring partner is X. So this must be given in your question. Suppose in the question, if it is given that Y's capital is paid immediately, so you have to pass Y's capital account debit to cash oblique bank account. But if the question is silent, so you have to transfer this capital to his loan account. So in this question, you didn't find anything that X's capital is being paid immediately or not. So X is the retiring partner, so his capital is being paid or not. So it is not given in the question. Then by default, what we have to do is X's capital account debit to X's loan account. So you have to write the entry. So the journal entry should be X's capital account debit to X's loan account, and the value it is given, that is 1,45,000. I am sure you understand this. So thank you so much. See you in the next session. Best wishes always. Thank you.